Most people are terrified of debt. They see it as a looming threat, a constant source of anxiety. They toss and turn at night, haunted by the numbers, the interest rates, and the ever-present feeling of being trapped, seeing it as a monster under their financial bed. A boogeyman that keeps them from truly resting, from achieving their dreams. You've heard it: stay out of debt, avoid it at all costs, treat it like the plague, cut up your credit cards, eliminate the temptation, destroy the source of your financial woes. Only pay cash. Keep it simple, keep it tangible, avoid the complexities of credit. This advice is well-intentioned, but it keeps you playing small. It confines you to a limited financial existence. You don't win by only playing defense. You need offense, calculated risks, and every tool available. You need to be proactive, not just reactive. Debt, when used wisely, is one of the most powerful tools in your financial arsenal. It's a lever that can amplify your efforts. The wealthy don't fear debt, they master it. They understand its potential and use it to their advantage. Debt is neutral, a force multiplier. It can amplify both positive and negative outcomes. In the right hands, it can build empires and accelerate your path to financial freedom. It can transform your financial landscape. Saving your way to wealth takes decades. It's a slow and arduous process. Leveraging debt to buy assets can shrink that timeline to years. It's like putting your financial journey into hyperdrive. The fear of debt keeps people average. It prevents them from taking the necessary steps to achieve extraordinary results. It's time to unlearn that fear and make debt work for you. It's time to flip the script and become the master of your financial destiny. Imagine debt as a shovel. You can dig a hole or lay the foundation for a skyscraper. The choice is yours. The tool isn't the problem, it's how you use it. Skill and knowledge are key. Not all debt is bad. Lumping all borrowing together is a mistake. There's a world of difference between debt that empowers and debt that enslaves. One kind of debt leads to servitude, trapping you in a cycle of endless payments and financial stress. The other to sovereignty, giving you the freedom to pursue your passions and build the life you desire. This isn't about reckless borrowing, it's about a strategic mindset shift. It's about understanding the power of leverage and using it to your advantage. The real secret isn't getting out of debt, it's getting into the right debt. The kind of debt that fuels growth and creates opportunities. And that's what we're going to break down. We'll explore the different types of debt, how to identify the good from the bad, and how to use debt strategically to build wealth. There are only two kinds of debt: bad debt and good debt. Bad debt is money borrowed for things that lose value. Credit cards for vacations, loans for cars you can't afford. These don't generate income, they drain your cash flow and keep you stuck. Bad debt is a treadmill. Constant payments, no progress. Avoiding bad debt is non-negotiable if you want to build wealth. Good debt is the game-changer money borrowed to buy assets that grow or generate income. Rental property mortgages, business loans, or student loans for high-earning careers are examples. The key: bad debt takes money out of your pocket. Good debt puts money in. With good debt, your assets work to pay it off. Understanding this distinction is the first step to transforming your relationship with debt. It's the foundation of strategic wealth building. Leverage. It's a concept that can seem intimidating, but it's also the key to unlocking significant financial growth. It's the fundamental difference between slow savers, inching their way forward, and fast-track investors who accelerate their wealth-building journey. At its core, leverage means using borrowed money, other people's money, to amplify your potential returns on investment. When you rely solely on your own cash, your growth is naturally limited by the amount you can save and invest. But with leverage, you gain the ability to control much larger assets, far exceeding what your personal savings would allow. You're essentially using a smaller amount of your own money to command a significantly larger investment. Consider this example. Investing $20,000 in stocks with a 10% return nets you a profit of $2,000. Now imagine using that same $20,000 as a down payment on a $100,000 property. If that property appreciates by just 10%, you gain $10,000 in value. That translates to a remarkable 50% return on your initial $20,000 investment. This dramatic difference illustrates the incredible power of leverage in action. And it's important to remember that leverage isn't limited to just real estate investments. Businesses routinely use loans and lines of credit to fuel their growth and expansion. They strategically trade relatively small interest payments for the potential of significant future profits and increased revenue. Even major corporations frequently borrow capital to fund expansion projects, acquisitions, and other strategic initiatives. They understand that waiting to accumulate sufficient cash reserves could mean missing out on valuable opportunities. However, it's crucial to recognize that leverage is a double-edged sword, and it's not without its risks. Just as it can amplify your gains, it can also significantly amplify your losses if things don't go as planned. For example, if your leveraged asset, like a property, experiences a decline in value, your losses are magnified proportionally. That's precisely why using leverage effectively requires a solid foundation of financial education. It also demands careful planning, thorough risk assessment, and unwavering discipline in your investment approach. Never borrow blindly or impulsively. Instead, borrow with a well-defined, calculated strategy, backed by thorough analysis and a clear understanding of the potential risks and rewards. Mastering the art of leverage means fully understanding both its immense power to generate wealth and the potential risks that come along with it. Use it wisely and responsibly, and you'll be well positioned to build wealth at a pace you previously thought impossible, accelerating your journey to financial freedom. That's the ultimate investor's edge, the strategic and informed use of leverage. Using debt as a tool is powerful, but risky if misused. The first, risk high interest rates. If your asset doesn't out-earn your borrowing cost, you lose money. Second, overborrowing. Too much debt, and even a small setback can wipe you out. Always keep a margin of safety, a buffer for unexpected events. Third, no repayment plan. Borrowing is easy, paying back requires discipline. For investments, know your income, expenses, and have a backup plan. Always ask, what's my exit strategy if things go wrong? The biggest risk is ignorance. Never borrow without understanding the terms and the market. Read the fine print. Know your rates, payments, and penalties. Do your homework, whether it's real estate, stocks, or business. The people who get burned by debt are those who rush in without knowledge. The antidote to risk is education. The more you know, the less you gamble. Respect debt, and it can be your ally. Use it carelessly, and it will burn you. Let's look at real-world results. A young couple saved $30,000. Not enough for a big home, but enough for a down payment on a duplex. They lived in one unit, rented the other, and let the rent cover most of the mortgage. As the property appreciated, they refinanced, bought more rentals, and built a portfolio. In 10 years, they owned 10 properties and achieved financial freedom, all starting with borrowed capital. Or take Phil Knight, who used loans to buy Nike's first inventory, scaling up with each round of borrowing. Without debt, Nike would have stayed small. The common thread, debt was used for investment, not consumption. They borrowed to buy assets that paid them, not liabilities. These aren't lottery wins. They're disciplined, strategic moves. Used right, debt isn't a burden, it's the fuel for your financial goals. The lesson? Use debt to buy things that make you money. That's how fortunes are built. Ready to act? Here's your playbook. First, get clear on your finances. Calculate your net worth and debt-to-income ratio. These numbers show what you can handle and what lenders see. Next, set specific, measurable financial goals, like buying 2 rental properties in 3 years. Work backward to see how much capital you'll need and what kind of debt fits. Third, build your credit. Pay bills on time, eliminate high-interest bad debt, and boost your score. Good credit means better loan terms and lower risk. Don't take on good debt until you've cleaned up the bad. Start small. Your first deal shouldn't be huge. Learn obsessively. Read, listen, study your market. The more you know, the more confident and successful you'll be. This playbook is your guide, but you have to execute. Take the first step today. We've dismantled the myth that all debt is inherently bad, a concept that has held so many back from achieving their true potential. We've challenged the conventional wisdom and are ready to move forward. We've shown the crucial difference between debt that actively makes you poor, trapping you in a cycle of financial struggle, and debt that strategically makes you rich, fueling your growth and building lasting wealth. Understanding this difference is paramount. We've explored the power of leverage, examined the real risks involved, and celebrated real success stories of those who have harnessed debt to achieve extraordinary results. These examples serve as inspiration and proof of what's possible. Now it's time for a fundamental mindset shift, a change in perspective that will unlock new possibilities. Stop seeing debt as a monster lurking in the shadows, a terrifying force to be avoided at all costs. The wealthy, the financially savvy, see a ladder. Each rung representing a strategic loan, a calculated risk, a deliberate step higher towards their financial goals. They strategically use mortgages to acquire appreciating assets, business loans to expand their ventures, and leverage to amplify their returns and accelerate their progress. This ladder isn't for everyone. It demands courage, the willingness to step outside your comfort zone and embrace calculated risks. It requires discipline, the unwavering commitment to stick to your plan and manage your finances responsibly. And it necessitates intelligence, the ability to analyze opportunities, assess risks, and make informed decisions. There are inherent risks involved, but the risk of never climbing, of remaining stagnant and missing out on your potential is far greater. The choice is ultimately yours. Stay safely on the ground, confined to your comfort zone, or start building your own ladder, brick by brick, loan by loan, investment by investment. Here's your call to action. Take stock of your current situation, calculate your net worth, understand where you stand today. Set a clear, achievable goal, a specific target that will motivate you to climb higher. Start learning about finance, investing, and debt management, equipping yourself with the knowledge you need to succeed. And take one small, manageable step today, no matter how insignificant it may seem. The power to change your financial destiny, to build the life you desire, is firmly in your hands. Debt, in itself, isn't your enemy. It's a tool, a financial instrument that can be used for good or ill. Ignorance and fear, the lack of knowledge and the paralysis of apprehension are the true obstacles holding you back. Master those demons, conquer your fears, and you can master debt and bend it to your will. Use it as a tool for growth, not a burden that weighs you down. Start your climb today. Your brighter, more secure financial future is waiting just above you, within reach. Take the first step now, and begin your ascent.